Good morning, everyone, and welcome to today's session of Pre-Bell with William O'Neill India, dated December 14, 2022. I hope everyone's doing well. And before we go ahead with the session, I would like to give a small disclaimer that any stock, any security that we discuss in today's session should not be considered as a buy or sell recommendation, and we are just doing it for educational purpose. So without taking up much time, I'll start with Nifty 50's chart analysis for the day and the week as well. And if you can see for the last couple of days, that Monday and Tuesday, Nifty has been bouncing back from the lows, and Nifty, like a session before that, was trading around its 21 DMA. Now it's well reclaimed its 21 DMA around the 18,600 levels, and comfortably trading above it. And going forward, probably the previous highs of around 8,900 can act as the future resistance. But till that time, the path remains clear. And on the support side, if you talk about it, your 21 DMA can act as a good support now. Apart from that, the 18,000, currently around the 18,600 and the 18,300 levels can also act as supports for Nifty going forward. Talking about the distribution day count, the distribution day count for Nifty currently stays at 2, which is very comfortable, and markets continue to remain in confirmed uptrend. If probably this distribution day counts increases to more than 4, markets will go into uptrend under pressure. And if probably like one of the distribution day count was added in the late stages of November, probably a few days from now, that is the 25 trading session rule, one of the distribution day will get expired as well. So overall, if probably no new distribution days get added, Nifty will continue to remain in confirmed uptrend and in a very comfortable trajectory as well. Going forward, probably this week is the week where it is the Nifty will be volatile with probably macroeconomic events such as the India inflation data came in. Your US inflation data probably came in last night. We'll be discussing more about that in the coming slides. And your three major central banks will be coming out with their policy statements during the week. And after that, your official Christmas holidays will start in the last couple of weeks of December. So muted action will be there in the markets for the last couple of weeks. So this is the week where you can see Nifty being a little volatile. So talking about key news, yesterday's FI bought Indian equities worth rupees 620 crores and DI bought Indian equities worth rupees 37 crores. Your major data set that was important for yesterday's session was your US CPI inflation for November that came in at 7.1% against an estimate of 7.3%. It is starting to cool off and it is cooling off below the estimates, but what's still there that probably what we can infer from the market reaction is that your Dow, S&P 500 and your Nasdaq gapped well above, like in terms of around 2%, 3% and 4%, but after they weren't able to sustain their gains and closed like with very marginal gains by the end of the day. So probably markets are still inferring that these inflation numbers are still high, and probably some more rate hikes will be required to probably tame it down going forward. And in a higher rate hike scenario, till the point in time there is no visibility that the rate hikes can subside, is not a good scenario for equities around the globe. Talking about on the micro front, Paytm board approved share buyback of rupees 850 crores at a max of 810 per share. PL arm, that is the Piramal Capital Housing Finance, acquired 100% stake in your PRL Agastya for rupees 90 crores. Talking about Ultratech Cement, commissioned a 1.9 mtpa Greenfield clinker-led capacity based at Pali, Rajasthan. Talking the global market update, as we was talking on the previous slide, your Dow, S&P 500, Nasdaq weren't able to sustain gain, and probably from the mid highs of 2, 3, and 4% highs, they came down to 0.3, 0.7, and 1%. Asian markets were trading flattish to minimal gains of around 7% each for Kospi and Nikkei, and Shanghai 0.1%. Crude oil has been trading higher, and after touching some intra-week low of 75, it's going. It's now back above the $80 mark level at 80.4. USD/INR continues to remain weak, and it's trading around 82.4. Talking about SGX Nifty, SGX Nifty was indicating some a few months back an opening of around 18,800, around previous close of around 18,600, about 200 gap up. So let's see if the gap up materializes in the session, and two, if it materializes, considering the US session, how probably it fared, will this markets will be able to hold the gains, will be the more crucial point in today's session. Talking on the sector front, if you probably see, Nifty Pharma is the only one that is trading well below the 50 DMA and the 200 DMA. And as you can see, even certain indices have started to come under pressure. Probably it's more on the major index that we try to look at the D-Day count, but it's when probably the markets in rally, we can look at the other indices as well. When the markets in probably in a downtrend or in a rally attempt, these sectoral indices condition at that moment won't really matter, because uh, as the only rule suggests, that when the market's probably in downtrend and rally attempt searching for a follow through day or searching for a new high, you won't be adding into stock into your portfolio. So at that moment, your sectoral condition won't really probably it will constructive outlook would be always better, that your sectors are displaying strength, but when probably a market is in confirmed that uptrend, or probably in an uptrend under pressure as well, it's good to look at the condition for your sector specific market condition as well. So major sectors have come under pressure. If you see pharma, IT, financial services, your auto, and similarly your Nifty small cap as well. So what we were earlier talking in the pre-bell series as well, and in the mailers as well, that your small caps and your mid caps are not firing. So that is where you can see no broader market action happening. It's just the Nifty 50 that is, or the probably the larger of the large caps that are firing at the moment. So if the rally has to sustain, it has to come from the broader market indices. So that's there. And coming back to sectoral indices, your pharma is the one that's lacking. The other one that's probably confirmed, probably well above the 50 and 200 DMAs, are your financial services and your FMCG, and the other one would probably be your banking sector. Those are the ones that are currently trading well above your 50 and 200 DMA, showing signs of strength. Now coming to a chart of the day. Our chart of the day is a Federal Bank, and before we discuss it, again would like to give a small disclaimer that it's not a buy or sell recommendation, and we are just doing it for education purpose. Talking about the Q3 FY20 result, it was a stellar performance. Q2 FY23 result, it was stellar performance, where your ROA was at a multi-year high of 1.2%, led by NIMs of 3.3, which was like a multi-quarter high, which has led to your cost-to-income ratio for the company going well below your 50% mark. And going forward, also management is highly confident of delivering an FY23 and ROA 1.2%, 1.25% or higher, which was earlier guided at 1.5%, which is driven by your low slippages, your benign credit cost, and your well-managed cost structure. So overall, in your mid-cap banks, this is one that remains highly positive in terms of your outlook, in terms of execution, in terms of your slippages going lower, in terms of ROA or ROEs improving, your NIMs improving, the OPEX for the bank also has been improving, and similarly can be seen in your NIMs, your NIA, and your EPS for the company annual. Similarly, on the outlook as well, if you see the 23, 24, and 25 EPS estimate is really positive, like on the consensus front for the company. This is a weekly chart, and what we're talking about is on the weekly. The stock is forming a flat base, as you guys can see, and which is a really constructive outlook. And there has been, if you see, there's this blue oval that is a tight area formation within the base as well. So that is again a very constructive setup for your for the stock, for this Federal Bank, and overall the ratings have been really strong, and probably your RS line has been trending higher because of probably the tight areas and everything. Your RS was consolidating. Probably if you can see a good move that this week have also your you can see a big volume bar, and Nifty crosses above the pivot on a weekly front with good volumes. Probably can be a good stock to watch out for in these market condition, and considering your sector as a whole, the Nifty bank being in momentum as well. So thank you, and that's it from my side. And stay tuned to the space of Pre-Bell with William O'Neill India.